All right, hey everyone, it's Eric Miller, Econologics, Financial Advisors. I don't know what day it is. It just seems like Groundhog Day every single day right now. But I do want to make a observation. As you can see, because Econologics is CDC compliant, we have keep calm and wash your hands right now. Now, I'm going to give you an update on, again, things that I'm observing and I'm hearing, and I'm talking with practice owners who I think are making correct financial decisions about their business and what to do. So I'm gonna download some things that I've seen. I'm gonna address the new bill, the new stimulus bill that came out in this particular video. So here it goes. All right, number one, you are still responsible for making sure that the organization stays there. That's your first responsibility as an owner. So now, what comes into play? The relief loan, do or don't. Okay, so here is my viewpoint on this. Number one, you have to do what you feel is right, okay? But I will say this, the devil is in the details on these loans or these grants. So you have to make sure that you read the fine details, someone looks at them. This is the only thing that I've seen in the past is when that easy money has been made accessible really, really fast. It usually comes with titanium strings. So I don't want you to get into a position where you're locked into something and then 6 months, a year from now, all the stipulations you don't have in place and now you're stuck with a really, really big loan. So I just want you to be very careful when you're looking at these things before you decide to do it. I would rather that you outproduce the problem and do what we're going to talk about here, but just be very careful when it comes to the relief loans. You have to move fast. Right now, and this is, the successful action that I'm seeing with most practice owners is that they are, of course, furloughing their workers so that the expense is not there. And I know it sucks, and I know it's no fun, and I know it's probably the hardest decision that you've ever had to make as a business owner. But like I said, your responsibility is making sure that you keep the form of the org there, and you have to move fast on that. Here's why. Most of you that are insurance reimbursed, all you're going to have right now are whatever you have in your business bank accounts, whatever credit lines you have, and your accounts receivable coming in. That's all you're going to have. And your patient drops are, 20, 30, 40, 50, 60%. So you can't wait to furlough people because you think you may, see an uptick. You have to move really, really fast right now in making that decision. I know it's a tough one, but it's something that you have to do. That's another reason why I'm not really a big proponent of the bill, because I don't know how long it's going to take to get some of this money. And right now, you don't have the luxury of time. Okay, so the next thing you have to do, you have to reanalyze your expenses. Okay, so if you're going to furlough workers, you do have to make sure that you're seeing a minimum number of patients just so you can cover your basic expenses, rent, utilities. If you have some loan payments that you haven't negotiated with your landlord or your lenders, you have to make sure that you come up with like a new make break number and get in touch with your colleagues and your associations. I've seen some colleagues that have made spreadsheets on figuring out how many patients that you need to see at an average transaction rate so that you can at least cover your basic expenses. That's something that you must do, and you have to do, pretty rapidly. That's really, really key. And then the last one, and I may get punished for this one, I don't care. Because what I don't want you to do when things start to recover, which they will, okay, I'm not like completely pessimistic right now, but things like our observations have been when there's a shutdown like this, things just don't get back to battery right away. It takes a little bit of time. So what I don't want you to do is overwhelm the organization with expenses. You have to navigate this point so that you're not bringing staff back too quickly, okay? Now look, okay, this is gonna sound bad, but I have to say it. A lot of you are already overstaffed, or you weren't getting the proper amount of production from the staff that you had. So you have an opportunity here, now that you can see how important profit is, now that you see how important having organizational reserves are, you actually have an opportunity now to do the reset button. And when you're bringing people back, I want you to keep in mind that you have to now pay attention to putting money in reserves, paying off your business debt so you have open credit lines, and making sure that you're not overstaffed so that there's no profit there for you or for your household. This is a really key point. So whatever the patient load is, you have to make sure you're adjusting you're bringing staff back to what that patient load is. Don't bring everybody back at once when the patient load may not warrant that. But you do have an opportunity right now. And again, I know this doesn't help the worker that you're not going to bring back. But look, I mean, the organization being there and being able to serve your household is our responsibility. So I have to make sure that you're looking at your profit margins and that you're looking at organizational reserve. So if this does happen again, you're not in the boat where you can only go 2 or 3 weeks in paying people. So that's our update for the day. I know I'm talking fast. I know that there's a lot of moving parts, but I do hope this helps you. And I think that's it for today. Okay, do well. Stay vigilant. Stay aware. Stay courageous. Eric Miller, your BFF. Best financial friend forever. I can say it. There we go. Okay, goodbye.